Nasdaq 100 completed its bearish candle pattern and has yielded a greener candle and a good bullish candle last week, though it has retraced and yielded a very small greener body. We all know that there were greater supports here at 14,500 levels and 14,300 levels. It is precisely reversed from 14,550 here. So now what to expect from Tech 100 next week? We will see with the help of charts first, followed with indicators, and towards the end I will give you the overall summary of the observation and also the trading levels and strategy to trade for. Do watch till the end. Your every like, comment, share is a great inspiration for motivation for me to deliver on time every time and twice a day. First with the US and first with the Asia and Europe session and next with the US session. 2 uploads a day. Definitely it helps you in your day trading decisions. So do watch daily. Press the bell icon. Also you can remain updated by joining my free Telegram channel. The link is mentioned in the channel and video description. Now, if you look at the weekly chart, see first of all, higher lows are seen here. You can see these two aligned here. You can see the third candle aligning to the bottom and higher highs here. Right now, Tech 100 is staying within this zone. I will wait for a breakout below 14,500. That will be the confirmation of the bears out there. But right now, it is still staying in this zone. At the same time, one must note that the preceding candle here, the last week's candle here, has a very small body. See, the complete movement and the body size is less than half of the complete move, which suggests that there was lot much of downward pressure here towards the end of the week. That is the first observation. Next is, if it opens flat here, tries to continue on the upside, there is a possibility that it can try to come somewhere here, which is 15,200, 15,100 levels. Very good resistance. And if it breaks past this zone, may fall shy of the last week's high and the greater resistance at 15,400. Now this is just on the weekly charts. We all know that there is lot much of white space available for Tech 100 on the downside, at least till 13,000 levels, but whether it is going to happen in a week or so or not, that is what we will look into. Right now it appears it is not willing to break further. You can see a triple bottom here in the near term and then this bullish channel. See, it has come out of this channel and again trying to enter back into the channel. Let's have a look at the daily charts. What are the daily charts are suggesting here for Tech 100? Now look at the daily chart. See, there was a reversal sign towards the beginning of the week. Since then we have seen a good rise. Then in a single candle the entire rise was eaten away. Also, if you observe here, see higher highs, lower lows, all three beautifully aligned, and the last candle was a greener candle here. Hence, once you see it is staying above 15,050 levels, 15,100 levels, possibly a little more push on the upside may be seen in Tech 100. Now remember, this is a swing zone here. We can see lower lows are already done and at the same time higher highs are also seen. So possibly once it stays above this zone, certainly little more pull on the upside can be expected. Also, if you note, see, if you just connect the dots here, you will find it is trying to create a channel and this is a bearish channel. Now, so in fact, if you see it rising in the very first or maybe couple of days initially for the next week, upcoming week, you may not find Tech 100 willing to break past at least this zone. Yes, it can stay green. It can try to march for 15,200 and then subsequently ending up with a drop towards the end of the week. So this is something we should definitely take care of. Possibly we may see a rise towards the beginning of the week. It can try to initiate at 15,200 and then from midweek onwards or towards the end of the week, it can continue its downward journey. Now look at the daily charts more closely. What has happened here? We all know that it has precisely bounced back from the support zone. This is a good sign that it failed to break below this zone, that is 14,300, 14,600 levels, because below that the next support levels are little far below at 13,800 and 13,600 levels. Also, if you look at it closely, you will find, see, it has come out of this channel, given a sharp drop, now trying to yield higher lows, higher highs. This is something you should note definitely, and any breakout below this zone at 14,600 should be taken seriously, where it can try to break strongly on the downside. Now let's have a look at the month. Now look at the monthly charts. In the last week's analysis, we discussed that probably, see, the drop is done and it can try to pull a little upside, where either the monthly candle closing somewhere here at around the previous close, that is at around 15,200, possibility exists for this, or it can try to limit itself within this zone, where we may see a rise and then subsequently a drop towards the end of the month. So maybe 2 trading sessions bullish and then last 2 trading sessions for the month can initiate with a drop, And then the September month, because see in the next week we have one trading session from the month of September. The candle is going to start this week itself, so possibly we may see the next candle also trading bearish, because see we have seen 4 to 5 strongly bullish candles in Tech 100. You can see this. And at the same time, one beautiful thing is, see the lows of all these candles are beautifully aligned. It has not yet breached the lows of this channel. It is still staying in this bullish channel. Also note that this is coming after this sharp bearishness. But look, the bullishness was more sharper than the drop here, and this suggests that the bulls are still here to stay. However, we can still expect couple or more red candles before it looks forward to any upside, and it does. Possibly the beginning of the next month is going to be weaker and we can expect a little more drop, but this is just an expectation. Let's have a look with the help of indicators. What are the indicators are? Now if you look at the indicators, see the 20-50 moving averages are little far below at around 13,500 600 level. That is the 20 months moving average, and this is also a great support. Now also one must note that see it has completed consolidation and sharp breakout. Lower highs are seen, so possibly 16,000 it is not willing to break past by. That is what it appears. Now on the monthly charts, why I expect the next candle to also remain bearish? You can see stochastic is extremely overbought. It has just started looking down. Possibly it can continue to trade lower and yield couple or more red candles here. So yes, that is why I expect that possibly next month also we are going to remain bearish, where we can expect lower lows around 13,800 possibly. Now see MACD here, this is only one thing which is trying to give signs of bullishness, but yes, it can converge a bit before diverging further. Now if you look at MACD, see the MACD on Nasdaq has crossed over after almost 3 years on the buy side. Also one must note that Nasdaq is staying above zero line, and it has always continued on the upside since last 15 years. You can see post financial crisis it just stayed above the zero line. So this crossover is equally important. However, it is traded with divergence so far. So 3 greener candles, possibly couple of red candles where it can converge a bit, not crossover but converge, and then from there it may again take off on the upside. So yes, next month possibly is going to remain bearish, but right now this month it may try to close somewhere here at around 15,200 to 15,000 levels, and then continue with the drop on the next month till towards 14,300 13,800 levels. Now this is just an expectation. I will give you the detailed review for next month in the next week's analysis. Now look, stochastic is RSI is comfortable here. Let's have a look at the weekly chart. See on the weekly charts, one important point has happened. The prices were divergent from the moving average. The prices converged close to moving average, and now again trying to look upwards. Yes, still the moving averages have flattened a bit. However, they are still bullish. Possibly we can expect a little conversion here, not crossover but conversion, and hence few weeks from here can remain slightly bearish. So next week it appears we are going to trade in a narrow zone here. We can see a rise earlier and then possibly a drop towards the end of the week. However, the candle might remain in green. Now if you look at the stochastic, this is at bottom, it is oversold here. So possibly another green candle can be seen. The MACD, now see the MACD has crossed over, trying to trade with divergence, trying to stay bearish. You can see, can you see this crossover coming at extremely higher levels? And this calls for a pullback, and this pullback has to be little aggressive, and hence yes, this also confirms my hypothesis that next month we are going to stay bearish. Hence towards the end of the week this bearishness may start. We have to be watchful and careful here. Now look at the RSI was overbought, it has come down. Coming to the daily, now on the daily charts, moving averages are on the verge of a crossover. This is a bearish cross. At the same time, you can see price is taking the support from the 100 period moving average and bouncing back. So yes, it could still try to swing a bit between this zone itself. We have to watch a little. And if you look at the stochastic, this was near to top, it has dropped a bit. The MACD, now see this is important, MACD is at the bottom, it is willing to converge crossover, and hence little greener candles cannot be denied, because see this is important here. It can try to pull a little up. Hence next week we may see a greener candle on the weekly charts, and possibly the daily charts might try to pull it a little up. Even if it has to drop, it has to rise earlier. RSI at a comfortable zone. So considering this, now we have seen the charts, we have seen the indicators. Time for me to define the strategy for you for next week, and at the same time give you my summary of the observation. But before I proceed, if you want to learn this art of trading, you should join my mentorship batch. The 25th batch is going to start on first week of September. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. See, you need to first equip yourself with the tools, techniques and strategies, and definitely the investment you do for learning will reap profits for you for lifetime. This is the only investment which is profitable for life. Thus, do not miss this opportunity. Join the mentorship batch. Also, you can be part of my Signals channel. Reach out to me for more details. Now, see, we have observed that Tech 100, there is a possibility that it can try to retrace a little further up and can try to stay bullish for a while. Maybe it can again try to attempt and achieve 15,200 and 15,400 zone before starting to drop again towards the end of the week, where we can expect it to again come down to 15,200 levels too. So this is something we can expect, but yes, a little retracement on the upside cannot be denied. And thus, first, possibly, let's talk about where to buy. I will recommend you to buy here at 14,940 levels itself, where we can expect 15,000 levels as the first very strong resistance, then 15,045 and 15,095. These two are greater resistance level. If you see Tech 100 staying above this zone, you can expect it is going to yield another 100 points from here, where we are looking at 15,200. Now 15,200 is a great resistance. Any move beyond 15,200, remember, any move above 15,200, it must try to attempt and achieve, go closer till towards 15,400 levels. Now 15,400, and let me add 350 here. This is the zone where we have maximum resistance for Tech 100. So above 15,200 there will be a little more bullishness, but 15,400 is what you should be cautious of. Very strong resistance here, and below that, beyond that, 15,490 levels. Only if it breaks beyond that, sky is the limit. I do not see Tech 100 breaking beyond this zone next week at least, and maybe in the near future as well. So possibly if you see it at around these levels, also these are the levels where you can try to initiate a sell entry for the month of September. Possibly we can see a bearish month. So this is what you can expect. Now on the sell side, 14,880 is the only level where I will recommend you to sell, but then also 14,840, 14,800. Now 14,800, very good support here on the downside, and then 14,720 20 levels, 10-20 levels. This is the next strongest support. If it stays below this, you can expect a sharper drop, which is going to take it till towards 14,660, 14,500 levels. 14,500 is the ultimate support here on the downside. Below this, you can see 14,300 coming into picture. Now this is the zone, and this is also applicable for the next month. This is the zone where we are having maximum support for Tech 100. So take your positions accordingly, trade accordingly, trade with the stop loss, trade with the trailing stop loss. Do like, share, subscribe and comment. Do join my mentorship badge, to join my Signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my free Telegram channel. Reach out to me for more details. Thank you very much. Have a great profitable trading week ahead. Thank you.